What's up, YouTube? It's Nick again from Mystery of Money, a channel where we try and take the mystery out of money. So you might notice I'm driving today instead of sitting behind a desk and a computer. And I thought it may not be a bad idea to talk about this topic. In this video, I'm going to talk about loans, what they are, how they work. So comment below if you have a loan. I know that's a kind of trick question. Most people do. I do. There's proponents out there that say loans are bad or anything like that. I pretty much take the topic of loans are like money. It's a tool. It can be used for good or bad. There is no right or wrong answer. But let's get into loans. So how a loan works, you use leverage. So by leverage, I mean if you want to buy a $50,000 car, but you don't have $50,000, you have $5,000. You can use the bank or lending institution as leverage to take your $5,000 and buy a $50,000 car. And the reason I use leverage as a term is because in the news lately, there's a lot going on about over-leveraged companies or borrowers being over-leveraged. And all that means is simply you're too much in debt. And, I think about that a lot with car loans because, your average car loan, I don't know, I gotta say your average vehicle price is, let's say $40,000. And that's not a, obviously I'm trying averages. It's the middle ground. So not your $20,000 car, not your $80,000 car, somewhere in between. So anyway, you go out and you buy a car and you utilize a loan to get that car. And how the loan works is you're going to pay a set principal and interest. Your interest rate is determined by your contract or by the dealership or bank or whoever wrote your car loan. And then there's what you call an amortization schedule or an amortization period. So typically a car loan is, let's say, 5 years or 60 months, payable out over 60 months. And that's what your payment is set on, is 60-month payment. So a portion of every payment is going to be principal and interest. And at the end of the loan, there'll be a small balance that you'll pay off and be done with it. But how they calculate the interest, so what they do is they take the outstanding principal balance, what you owe on the loan, multiply that by an interest rate that's divided by 365 days and multiplied by the amount of days in the month you're in. So January, 31 days. November, 28 days. And that's how they calculate the interest. The principal is what's left on the payment. So if your payment is $200, interest is $25, $175 of that payment goes towards your principal. And there it goes, and it divides it out and goes down over the life of the loan. So that's a very simple explanation, condensed version of what a loan is. And there's multiple types of loans. There's personal, unsecured loans. You can get those at a bank or credit union online. Typically, they have a higher interest rate because they're unsecured. You have your car loans or your equipment loans. You buy your boats, your toys, your RVs, those types of things. Then there's your real estate loan, or what is called a mortgage. So a mortgage is no more than a loan that's secured by real estate. That's it. A lot of times people say, well, I don't have a mortgage. I have a home equity loan, or I have a home equity line of credit. Surprise, that's a mortgage. Because they put a mortgage on your house to get that loan or line of credit or whatever. There's nothing wrong with that. Again, it goes back to the leverage. Let's say you want to buy a $100,000 house. So you could either save up to be able to buy that house, or you use leverage, the bank, take your $10,000 and multiply it to get $100,000, and you can move in today. That's where credit cards came from. People want things now. They don't want to wait. Used to be you could lay away. You could use layaway and pay for something and then pay over time, pay payments, and then when you paid it off, you get it. Now you have credit. You walk into the store, lay the credit card down, there you go. So that's just a quick, like I said, a quick very simplistic explanation of loans. But I was thinking the other day, looking for, I don't want to say content, but basically looking for something to talk about on my channel. And being in finance, it's very easy for me to say all of these terms and do things because I do it every day. This is what I do. And so I thought back when I was growing up or younger, it wasn't in finance. Luckily, I had my mom who told me all about this stuff and taught me about finance at a young age. But there's a lot of parents, there's a lot of people I know that don't know this. Money is the most utilized thing on the planet, but the most misunderstood, which is fascinating. Everyone uses money every day in some form or another. Yet most people have no idea how it works, how the monetary system works, how monetary policy is set. I'm by no means going to say, hey, go out and watch a whole bunch of Federal Reserve minutes and learn if it's not something you're into. Lucky for me, that's my job and my passion is money. I hope you got value out of this video. It was kind of a spur of the moment. I was driving back from an appointment and I thought, hey, why not? So if you did get value, appreciate a like or a comment below. Say what you didn't know about loans, what you did know about loans. Am I totally off base? Does everyone on the planet know how loans work? It'll be a good way for me to know what content to not publish next time. If you're enjoying the videos or you want to learn more about money, hit that subscribe button and follow me along. Thank you and have a great day.